I got your contact information from Pace Morby, who I'm in his subject to group, and I was told by somebody else this past week. I think those lists get kind of circled around in
Yeah,
various communities.
yeah.
Um, but you were one of the first ones to respond, so I really appreciate that.
Oh, that's nice. Well, that's just to let you know, but we do get, dozens of these requests a day. So
Yeah, I
it's
bet.
hard to fit all those requests in. So,
Yeah,
but I respond to every one. It doesn't mean, and then if they come on a Zoom call like you've done, then I'll build that relationship. So,
that's awesome.
yeah, so you obviously want to build a relationship, and that's what it's
Yeah,
about. So
yeah.
congratulations.
And whichever way that may be, that if
Uh,
that may if something works for us right now, or I'm all proponent of once you start a relationship in some way, shape, or form, it's going to blossom. At some point.
yeah,
Um,
yeah.
so my name is Jin. I let's see, where do I start? I am I was born and raised here in Panama, so I travel between, just so you know, I travel between Panama, the country, so Latin
Oh,
America,
wow. Okay.
and then Philadelphia and Florida.
Oh, wow.
So
Okay.
I go between all three. I'm trying to take Philadelphia out of the mix and
Mm.
maybe include Texas, Tennessee, just for business and homestead purposes. But I started my real estate journey in 2018.
Mm.
Um, I started basically the way a lot of people start. So getting a fixer-upper in a relatively not so safe neighborhood, doing some cosmetic fixes, selling it, um, renting it out to long-term tenants. So my real estate base is really just having properties that I can rent out to and that I manage myself.
Mm.
Um, I did that for a few years, and then I started a short-term rental business. So on top of having long-term rental properties, mostly single-family homes, I kind of went into, I wanted to do something business-wise, and I was like, great, I have real estate skills. I have, I can handle tenants. What else can I do? So I started short-term rental business. Um, so that's something that I'm working on right now. Uh, where am I right now? So right now I'm trying to get rid of my properties in Philadelphia.
Mm.
Um, and I'm trying to buy more properties in Florida and Texas. So
Huh?
um, one of the reasons I got into subject to with Pace is because, and one of the reasons I started the business too is because I just wanted more cash flow to buy more properties. At the end of the day, that's my goal.
Mm.
Um, I just want to buy properties and do one of three things with them. Either rent them out long term, rent them out, do Airbnb or short-term rental on them, or maybe do a pad split strategy. So those are my three exit strategies that I really focus on.
Mm.
Um, I reached out to you. I reached out to a lot of different people because the type of relationship that I'm looking for right now, obviously that may change in the future. And the relationships I've worked with recently are I would bring on maybe like a private money partner or a private money lender, and we would enter into kind of like a long-term relationship. So basically, I would identify a deal that has ideally really good cash flow on all three strategies. So long-term rental, short-term rental, pad split. Um, I would but the agreement would be I'll pay you a portion of the cash flow every month. I'll manage it 100%. And then you also get 50% of the equity of that property to be realized once it's sold or a cash out refi, whatever the case may be. So,
Mm.
um,
So tell me a little bit more about your thinking with regards to selling. First of all, selling property you've already acquired, because it takes a lot of
yeah.
effort to acquire property. And secondly, why you're doing single family homes. So uh, it sounds like you're doing single family homes. Is that right?
That
Yeah.
is correct. That is
What's
correct.
your thinking about that? Because cash flow is very challenging with single families. And why haven't you chosen like large multi-families, which obviously uh, I'm in that niche, but I'd like to understand your thinking on
Yeah.
that. Yep, yep.
The first question was why sell houses? So the reason why I'm selling my Philadelphia properties is, I think, largely personal. Um,
Personal for
I
what reason? What do you mean personal?
Yeah. So number one, it's not a city that I want to be in. It's quite dangerous. I don't want to live there anymore. Obviously, managing the properties out of state has been relatively easy. Um, and number two, related to number one, is I recently got divorced and I want to kind of be out of Philadelphia. Um, I also want to increase my presence in Florida and Texas. So if I could sell my properties in Philadelphia and 1031 exchange them to properties in Florida or Texas, that's kind of what I would like to do. So that's what I mean by personal preference.
Hmm. Okay. Interesting.
Um, your second question was why single family and why multifamily? I don't have a great answer for that. I think if I see deals every day, and if a right multifamily unit comes along, and I was like, this is a great cash flow opportunity. It's in my buy box. It's in Florida, or where I want to be. I have a private money partner interested in doing this deal with me. The numbers work great, then I'll be more than happy to jump in a multifamily deal.
Yeah, so I'm gonna
I think
make
it's
a
more
yeah, so I'm gonna make a presumption here. You got into real estate because you want to create wealth, yeah? Uh,
correct.
you want cash flow, you mentioned that. So single families, I can never work out what you're gonna get cash flow. You're lucky if you get $100 a door after all
Yeah,
expenses, especially if you're bringing in partners. It's even less because they need to
right.
get paid. So you kind of like spinning your wheels. I mean, I did this first time round over 20 years ago with cotton sheets, no money down. And I
Yeah,
quickly realized single families weren't going to build an income enough income for me to live off. And I wasn't doing it as a hobby. I was doing it to make a living, to create wealth. And I get the impression that's what you want. So it's not going to happen with single family. It just isn't. It takes so much effort to acquire the things, and then you sell
yeah,
them because you don't like the area. I mean, it's just taking a step back.
right.
Really? I mean, and then you say, well, I need the money to do a 1031 exchange. Well, that's just kicking the can down the road. You still owe that money in tax. So your tax strategy hasn't been right along the way. So you got
Yeah,
to figure that out as well. So there's a lot what you're doing right now. You're just spinning your wheels and you're gonna just be busy
right.
running in circles. So it's very important how you construct a business. That's why I wrote a book, Cautionary Tales, about real estate investing the first time round, because I quickly realized you actually need 100 units or more to create long-term wealth.
Yeah,
And that's because of scalability and a number of issues. I've written a couple of books to illustrate that. I would encourage you to go ahead and get them from Amazon, read them, understand what you're constructing. So many people come into real estate think about the road that you outlined at the beginning of the call, which is do a fix and flip, get a bit of money, buy another house, and it'll take you 20 years to even get anywhere
right.
near the portfolio you need.
You're right. You're
And
right.
so there's a much quicker way. It's not easy. No path is easy. Okay. But you need to be concentrated on a niche. And a multi-family will not just fall in your lap. It won't. It's a niche and deserves full attention to be successful in that space. It demands you building a network. A lot of it's capital raise and such like. So, I would have some serious talks like you're doing right now with me, right, in the community and find out what you look at your overall goals. What do you want to achieve? Where do you want to be in the next 5 years? And look at the strategies that are going to help you get there. Look at somebody who's already got there and follow their example. because right now you're not on that path from what you've told me.
Yeah.
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 I'm sorry if I'm brutal, but it's going to
No, that's
help you.
I like that.
Yeah, if you think about what you're constructing. Yeah. Yeah.
Yeah. My next, from what I'm hearing from you is my next deal must be a multifamily unit deal, or at least a deal that generates a good deal of cash flow, which is most likely going to be a duplex or higher.
Duplexes aren't going to do it either.
It has to be much more than a duplex.
Yeah, it's only two doors. It's like buying two houses. It's a step in the right direction, but just a simple step. That's all it is, right? And when people say, "Oh, like 100 units," I mean, they're $10 million or $100 million. I haven't got that in the bank. How on earth do I do that? Well, you join a team. It's
Yeah,
all about networking, you see. So, how many networking events are you doing on a daily basis? You build your network up. Now, I'm not there either. You've got to be someone like Pace or Vinajetti or whatever. Well, okay, you say, well, I'm not them. But yeah, it takes time to build anything. But yeah, at least you're building in the right direction if
yeah,
that's what you're looking for. Now, there's a place for buying single family homes. Of course there is. There's a place for fix and flips, but fix and flipping is a job. Wholesaling
right,
is a job. You're only good as your last sale. Gator
right.
is a job. I'm elite gator. It's just a sales job, right? So if you want to create wealth, long-term wealth, you have to look at the bigger strategies. That's
Okay.
where Pace is an example, right? He
Yeah,
can he can jump on a Zoom call, get 1,000 people, raise capital for large multifamily, and takes it down in an hour because he's built his network, and that's where the bulk of his wealth comes from. Same with Vina Jetty or Grant Cardone. You look at any of the big influencers in this industry, that's where they get their wealth from. Now, you might say to me, yeah, Graham, but I only have a goal of making 100,000 a year. Well, then it's a different strategy. So, whatever your financial goals are, where do you want to be in the next 5 years? Then that's what I would encourage you to think about. Also,
mm,
yeah, okay. Pace has got this list. I think he just wants us to network because you're
yeah,
not going to find PMLs or PMPs from within the group. And if you do,
hmm
it's only going to be a temporary thing. We're
right,
investors too, and we
right,
expect a really good rate of return. And also, there's lost opportunity if I put more than 80,000 in any deal, and I'm certainly not going to do that with a single family. It's a waste of
right,
time, you know?
right,
Yeah, it's a lost opportunity. So,
right.
but what I would encourage you to do, if you are looking to create wealth, to get into large multifamily, is look at syndication. So
Okay.
if you have like 80,000, if you have 50,000, 80,000, 100,000, you can put it in the pot with other investors and get a good rate of return, on a
hmm
quarterly basis and a share in the equity at the end of the deal.
Sale. Yeah.
Yeah, yeah. So you're going to get much further along financially, much quicker doing it that way than doing it in single families.
Mm. The syndication is that I guess because you share the equity and the cash flow, you are part owner of that, whatever that project is.
Yes, yes. So
Okay.
an LP side is completely passive. You have no say
Okay.
in the project. You throw your money in the game and just lock it up. And every quarter you get a return on your money, which is
hmm
good, 7 or 8% usually. And then at the end of the project, which is 3 to 5 years, there's usually a sale and then you get a share in the equity.
Got you.
Yeah.
Do you get tax benefits while you're part of the syndication, like real estate tax
Absolutely.
benefits?
Yep, you
Okay.
do. Yeah, you get
Wow.
all the benefits. So it's just way, way better than single family. I just cannot understand, other than ignorance, why people don't do large multifamily. You know.
Yeah.
Now,
I think it's because, to your point, it requires a mindset shift. When you asked me why I'm not doing multifamily, I was like, because I haven't done one. But if I do one, I'll be like, okay, this is great. I'll probably do more.
yeah, yeah, especially if you're looking to create that wealth. And that's what I was doing 20 years ago when I started. I wanted to live off real estate. I wanted the
right?
time freedom and everything else. And owning property, I saw that. But I ended up in a job because it wasn't scalable.
Okay.
So I'd encourage you to. I'm not going to make a lot of money. I will make $1 or two if you buy my book, right? Okay, but that doesn't make me rich. I just,
Is the book called Investing in Large Multifamily Solved? Is that the one behind
yeah,
you?
yeah.
Got you.
I'll put my. It just covers my cost. Producing a book takes thousands of dollars, so I don't recommend.
Yeah. I'm a really big reader, so I'll definitely check it out.
Yeah, I've got 3 books there, and they will help you a lot and help you think about, your journey, because it takes so much effort to build something up, and then you tear it down because it's not right. So it's worth
Which one would you recommend starting with first?
just start with the cautionary tales so you
Okay.
understand about why small multifamily isn't that cool.
Okay.
Yeah. Why not a duplex? Why not a triplex? Why commercial? My biggest, I had over 100 doors, you see, and had a
Wow.
job, and there wasn't anything wrong with that. I couldn't find a management company to do it because they steal the money from you and they
Yeah.
don't do a good job,
Most
right?
of them suck. Yeah. Yeah.
So there's all sorts of issues, and if you get that book, we can have another call like this. I can highlight all the issues and things of that because I've been down that path and I lost it all as well. It's very painful.
Wow,
And
really?
then and then I wrote these 2 other books, Why Large Multifamily. And if you look at the successful people in the space, like Pace, that's where he gets his wealth from, his large multifamily.
Yeah.
So if you look at the influences, look at those who've gone before us, right, and have succeeded. Yeah. Yeah.
Yeah. That's what I'm seeing. I'm seeing single family and like Section 8 housing and all these things are kind of rungs of a ladder. You
Hmm.
don't stay in that rung. You kind of like use that to go up on the next rung. And
Yeah.
I
Yeah.
think the only successful people that I've seen that have single family homes are because they are like ultra luxury single family homes where, it's like maybe they operate an Airbnb business and they have a mansion and they charge like $2,000 a night.
Yeah. And they've settled for a lot less. And so it depends on what your goals are, what the
Yeah.
lifestyle you want. But the point is, you can design the lifestyle that you're looking for, and yeah. Yeah. I hope it's been helpful in some way.
Very helpful.
Yeah.
No,
Yeah.
I you may not think that this comment was very impactful for me, but it was. Like now at night when I go find deals, I'm probably going to start considering multifamily um more so than single family. It's always been a thought in my head, but I think you kind of like opened up the seat a little bit more.
Hmm.
I'm just used to single family. I think I just needed somebody to tell me like, hey, like look for something else.
Hmm.
Um, and it's the same work. I'm
Yeah,
guessing.
it,
I
it
have a
it's
duplex.
similar. It is similar.
Yeah,
And it's a little bit more, but it's not that much more. And here's the thing, single families, look, what are they designed for? They're for a family to live in.
yeah.
What's a multifamily, large multifamily? It's
It's an
designed for
investment.
people to rent.
Yeah,
So it's a whole different mindset, you see. And they're
yeah.
set up in different ways. So um, hopefully that's been helpful. And remember, PMLs, you want to seek those outside of the community. You want to look at professionals, people who
Okay.
are too busy to even think about real estate. They have, they look at their bank account, they have millions of dollars in there, and they're sad that they see that figure in the bank and they haven't got time to deploy it in more ways that make better use of that money than sitting in the bank, right? But they haven't even got time to think about it.
Yeah.
That's
How
what
did
your
you,
PMLs are. Yeah, yeah,
yeah.
yeah.
How did you scale your business? So I'm guessing there was a lot of work involved, but I'm guessing there was also a lot of capital raising,
Yeah,
partnering. How
yes.
did you get access to the liquidity to get to 100 units?
It's day by day, setting a daily goal of how many networking events are you doing. So this is counted as a networking event. I'm getting to know you. So
Okay,
it's all about how many networking. That's why PACE is number one message, right? Is squad up, right? Even
squat
calls
up.
it summit, squad up summit, right? Forming those relationships. That's it.
So every day, if I decide I'm gonna speak to 5 people today, new
Yes.
people, and
Yeah.
I do that every day,
Every day.
something will turn up.
Yes.
Okay,
Yeah. And if you're purposeful like we've been, like who should I talk to next? Is a question you should ask each person and look at where they are. Look at their story. Yeah.
okay,
Yeah.
I'm gonna do that.
Yeah. Very good. All right. Well, you have a wonderful day, Jin. Don't hesitate to book another call with me if you like. Subscribe to my YouTube channel if you like as well. That's a
Absolutely,
good way of keeping in contact. It's
I would
Graham
love
Norris
that.
Coach. Let me just it should be in my bling card. Let me just put
Good
that.
morning. This is Graham Norris. Today is the 12th.
There we go. That's my YouTube channel.
Amazing.
Yeah. There you go.
I
All
love it.
right. You
Very
have a
inspiring,
wonderful day.
Graham.
Yeah.
Very inspiring.
Yeah. Very inspiring too. Thank you. Nice to meet you.
Thank you so much.
Right. Bye bye.